Hi, my name is Rick Stromgren, and I'm a senior commercial lines underwriter at the Main Street America Insurance Company. I've been in insurance for 13 years, and all of those years in commercial underwriting, and then progressed through the department from a trainee to an assistant, from an assistant to a regular underwriter, and then from the regular underwriting position up to my current role as senior underwriter. I have the fortunate opportunity to work with 15 other underwriters within my underwriting department. The 15 underwriters and myself handle the New England region, which includes 6 states: Massachusetts, New Hampshire, Vermont, Maine, Connecticut, and Rhode Island. Each underwriter handles 1 to 2 specific states in that region, but we also underwrite business all up and down the East Coast as well as across the country. The typical size of policy that each underwriter handles is anywhere between $2,500 and $5,000. The typical territory size for each specific underwriter ranges between $8 million and $12 million. The overall territory size for New England is around $75 million in commercial business. From a strategic planning perspective, as an underwriter, we work very closely with our management chain and our home office department to review, analyze, and interpret what the strategic plan is that was set by the executive team. From there, we work and collaborate with the other functional departments within the company to plan out how we're going to approach and obtain these goals or reach these goals. Some of the departments we work closely with in this manner are our marketing team. Some of the strategic plans that are most often the goals for tactical movement are growth and profit. From a growth and profit perspective, we work very closely with our marketing team to identify independent agents and customers that we feel have a need and an opportunity to grow from a new business perspective. So we work hard to identify and develop plans with those agents to help meet our key performance indicators or our goals that will help drive the strategic plan for the region and the company. Now I'd like to talk about the steps of the underwriting process. I'd like to talk about the 6 steps of underwriting new business. The first area is the original submission or initial review. And the initial review in today's world is all done electronically. So back when I started, just about 12 years ago, we still had paper files. And we would have those wonderful stacks of paper that would sit on your desk. That would be your new business intake. Today, that is totally changed. So now we take those paper stacks, and that is now put into our electronic automated system. So now we have that electronic filing cabinet where all this new business gets put into. So with the initial review, we're checking exposures. And when I talk about checking exposures, I'm talking about reviewing the client's operations, their locations, their financial information, if they have any property, their experience, whether that's years in business or ownership of a property. Talking more traditionally, it could be a schedule of vehicles that they own or their loss history. So those are the typical exposures we review at the initial review process when something comes in the door from an independent agent. From there, the next step in the underwriting process would be to perform kind of some additional questions or additional information inquiry to those independent agents. So after we've gone through all of the initial review information and gone over those several different items I just spoke about, we would ask some clarifying questions. So that would be something like, when was the roof updated? Or when did they have electrical replaced in their building? When did they purchase their vehicles? When did they hire their new employees? How long have they really been in business? So just to clarify some of the exposures that were initially submitted by the agency. Again, this is primarily where there's a lot of back and forth between underwriters and agents to really get at some of the necessary information to kind of get into the next step of the underwriting process. The next step of the underwriting process is where we determine if we're going to provide coverage. And there's really three easy ways to put this. The first option is yes, we'll provide coverage and we'll accept the risk as is. The second option is yes, but with conditions. And those conditions can include anything from exclusions on the policy for operations we don't want to cover or locations we don't want to cover. It could be amending limits. We don't want to offer too low of a limit or too much of a limit. That could also include adding exclusions to the policy or additional limitations. Another area that this is most commonly known as is where we look at deductibles. So this is where we have the flexibility to determine if we want to increase a deductible or lower deductible or remove a deductible altogether. From there, the next step is probably the most important step out of this entire thing, and what hits home to most people is pricing. So pricing is normal throughout the entire underwriting process. A lot of customers always want to know what an insurance company does very well, and they want to know if they're competitive in the marketplace. So pricing really kind of expands throughout this whole process, but there is a kind of a special step where we particularly review all of the exposures and the rate to get our pricing for the risk to accept it. The third option in this pricing process is just a flat out declination, a no. So we don't have an appetite for this type of exposure or class of business, or we can't get an adequate rate to cover the exposure that we have on hand. After we discuss pricing and it's a yes or a no, the next step in the process is the policy issuance. Again, this is all electronic now. So once it's submitted electronically and the policy is bound and issued, this is where the electronic funds transfer or EFT sweep happens. This is where the agent and the insured obtain a policy number. And then when we get through this process, this is where the customer, whether that's the agent or the insured, has access to an online billing portal or an online servicing portal where they can get certificates of insurance or forms that they need to provide to, whatever parties need them. And then the last step in this whole entire process is kind of like the final underwriting step. This is any policy follow-up. So whether that's housekeeping items, anything that was quoted subject to. Some of the most common areas here are, requesting loss runs. So we will quote a lot of business subject to clean loss history. And while we don't always have access to the loss runs at the time of submission, we'll be able to obtain those after the policy is issued from the agent. And then the one last piece of the follow-up would be asking the agent for additional lines of business. So often is the case, we'll get one line of business for an opportunity to quote. So they'll send in a general liability with a property policy, we'll quote it, and then this gives us the opportunity at the follow-up stage, once we've issued it, to kind of look for, hey, is there an opportunity to write their supporting automobile, their commercial automobile line of business, or do they have a workers' comp policy that we can round out the account with? So this additional follow-up step allows us to pursue additional business with the independent agent and with the customer to help their overall retention and build the book of profitable business for underwriting. So now I'd like to talk about the renewal underwriting process and the differences between new business underwriting. So as a renewal, we have the fortunate opportunity to have experience with the account. We've written it for a year or two since the new business submission. We've gone through the loss history. We've audited the account. We've had an inspection done. So we have a pretty good idea of what we have on the books. As a renewal underwriter and the renewal process, the biggest thing we're looking for is any change in those exposures, whether that be a new building that was purchased, a new automobile that was either purchased or sold, employees or payroll that changed from the prior year. So those are the main differences we're looking for at the time of renewal business. The key part of the renewal process is communication with our agents. We want to make sure that we are in constant contact with agents as business comes up for renewal so that we can stay on top of any changes in exposures. This gives us the opportunity to be flexible with our pricing and help the agent retain their business within their office. Again, a big part of the renewal process is seeking those additional lines of business. So one of the things we always look for is account rounding. So in an earlier example, talking about writing an initial general liability with a property policy, once that comes up for renewal the next year, again, there's an opportunity for us to reach out to the agent when we're talking about pricing or the renewal date to look for those supporting lines of business. So often is the case, we can write that supporting line of business because we have experience with that first one, that first policy, and offer better pricing, right? So the flexibility that comes with renewal business and renewal underwriting supports our new business push, but also gives us the flexibility to write more business and be more price conscious for the consumer. One of the other topics I'd like to talk about with our renewal underwriting and also with our new business underwriting is selling value versus price. So often is the case today in commercial business, we are in what is called a soft market, where pricing is very aggressive and insurance is very easily placed. When agents are selling business, it's very easy to always go for the bottom dollar. And in the insurance world, you'll always find somebody that can write the exposure and the policy for cheaper. But it's very important to recognize that it's important to sell value to the consumer, whether that's the insured who's seeking the business or even the independent agent that's coming to you for service. So it's all about selling value of the independent agency. What is it about your agency that differentiates from all the other agencies that are out there? What is it from a company perspective that separates the company from all the other companies out there? On the commercial side of the business, most companies offer the same type of product, but is it in the way they handle their claims that is the differentiator? Is it the relationships that you have between your underwriters and your office personnel from the agency side? So these are some of the small differences that matter when there's an opportunity to place business with all the different carriers and all the different agencies out there. It's all about selling value of what you add and what your agency adds and what ultimately the insurance company adds to the ultimate consumer. So let's talk about some underwriting challenges in today's commercial underwriting world. Technology seems to be ever advancing in the insurance industry. I'd say over the last 12 years, the change in the technological world has greatly enhanced the underwriting field. Back when I started in 2008, we had those stacks of paper, those stacks of files. Now with technology, we have automated systems and online applications. This has changed the way the insurance industry, and in particular underwriting, has worked for many, many years. And with that change comes a lot of disruption to processes, practices, standards, overall functioning of departments. And it's been a long time coming, but I think we're at a point now where it provides the opportunity for ease of use and ease of doing business with insurance carriers. You know, back in the old days, I say that meaning 2008, it used to be all phone call and email. Today, agencies are able to submit business right online from their own computer in their agency's office. That now comes directly to us in an email form through an online portal. So the whole process and the whole interaction has changed in a short 10 to 12 years. And it's taken the insurance industry a little while to catch up to that rapid change. And I guess it's easy to say that what's happened over the last 10 years will be nothing compared to what's going to happen over the next 3 to 5 years in the insurance industry. So what we know today and now is going to be drastically different from what it's going to be like in the next 3 years in the insurance world. From an agency's perspective, some of the things you can do to assist your agency partners is being very clear and prompt in your submissions, making sure that your submissions are complete and timely. So when you submit them to your underwriter, to your carrier, there are no missing information. There's no follow-up areas where the underwriter has to come back and ask for some additional information. That means for those habitual offenders that don't get signed applications, this is where we're looking for, a better opportunity to have full, complete submissions to the company. And just a few of those ideas help the underwriter be able to get back to you timely to have your submissions complete so they can give you an accurate price the first time. And it just creates a very easy process of doing business. So I would highly recommend that complete submissions, timely, promptness, and completeness will ultimately help your relationships with your agency carriers. Market cycles are one of the big important topics for the insurance industry. In my experience as an underwriter in the Northeast, I haven't had the opportunity to experience a hard market yet. While it can be territorial and even regional, right now in the Northeast, particularly New England, we are going through a soft market. A soft market is generally where pricing is very stable and coverage is very easily found and afforded. The hope is that as we transition through the market cycle of insurance, that we can, in our specific region, in our specific territory up here, get through and up to a hard market where pricing starts rising and insurance can be a little bit more difficult to obtain, but it also drives profit for the insurance company. One of the areas that we seem to be tightening a little bit or experiencing more of a hard market for a particular line of business is commercial auto. The industry overall has been experiencing some higher combined loss ratios or higher combined ratios, which is primarily driven by higher loss ratios. So across the company and across the country, we have been tightening some guidelines, being more restrictive in the types of business we write on the commercial auto side. But ultimately, that's the one line of business that we're seeing that is kind of following the hard market trend in the region.